welcome to the show.
Thanks for having me, Charles.
Thanks for that beautiful 10-year shout out to the other day.
Yeah, it's been an awesome 10 years. It was great to be there at the beginning. I missed the shoe cam when that came. I can't even believe we had it back then, but it was a lot of fun.
So, the point I'm making is I'm the Pied Piper of investing. And that's not that I love the stock market per se. I just love the fact that it's the greatest money-making machine in history, and it doesn't necessarily have to be so. I don't think it has to be complicated as Wall Street makes it.
I think, we're actually at a point right now where we might be at peak passive investing right now. I think individual investors and even institutional investors that do their homework are going to be picking stocks again. I think we're beyond where we were, say, for maybe the last 15, 20 years.
Here's the thing, though. We always get this thing every month from Bank of America, and they show the most crowded trades. Right. And so everyone piles into these same names. Right. So everyone has exposure to NVIDIA. Everyone has exposure to Microsoft. And then you look at the end of the year, if you ever kind of go through the list of the best performing stocks, you see names on there that blow you away every single year. And by the way, these are names that, who knows what Mongo does? Right? I mean, who can truly understand? I understand if I walk into the Gap and they've got some cool jeans that I haven't seen in there before, and I start to spend money there, I understand that.
I was just doing work on this yesterday coming in for this segment, and I noticed if you look at the Russell 1000, the top 20 performers this year, less than half of them are technology. There's a lot of names on there. There are car retailers, a shoe company, a hospital that just blew the lights out, and we didn't even see it.
What do you think that is? Is it a need? I think that to a degree the industry has to make it intimidating. I mean, listen, you want to get assets under management, and then there's also these quants and these folks, who do all these magical formulas and whatever. But, it feels like, again, and I think as much as they make it complicated, again, they all end up in the same stocks anyway.
It tends to be, but sometimes these trades are crowded for a reason. We can't deny that NVIDIA is a great company. NVIDIA is actually taking a page from the Apple playbook. They'll expand into other businesses, and this will be a big company for a long time, but doesn't mean that there aren't other companies out there. And that's maybe part of the problem with America, because if we pile so much capital into these names, a lot of these companies get starved for capital, and they have the inability to grow.
Well, to your point, right now in Silicon Valley, money's only going into two places: biotech and AI. That's it. So if you've made a greater mousetrap anywhere else, good luck trying to get funding for it.
Look, AI is going to be pretty important, but it's not going to be the only thing. And the good thing about AI is translating into a lot of other businesses. It's going to be every part of the industrial complex, even the utility sector is going to benefit from it.
Let's talk about a couple names that you like right now, like NRG.
Yeah.
Again, I know part of that obviously is all of the electricity that we're going to be sucking up using AI chips, electric vehicles, and those kind of things.
Yeah, but in addition to that, this is a real estate play, because 44% of their business is generation of natural gas. We're going to need natural gas, this clean fossil fuel. They have 21,000 acres of land in the United States. Instead of bringing power to the data center, they're going to bring the data center to the power. And they're going to actually have the data centers right on their land, right next to the grid, right next to the utility. That's a multi-billion-dollar opportunity for this company.
Would these be joint ventures then? Or they'll just kind of carve out the space?
I think they'll carve out some kind of thing. They'll obviously get premium for that, but the electricity, it'll be some kind of symbiotic relationship. But I think it's a home run for a stock that's 13 times earnings.
I remember like 25, 30 years ago, Google was getting a lot of heat over just how much energy it took for one Google search. And they started to build their own solar farms and those kind of things. You also like Crocs, and I love this idea. Listen, the shoe stocks are killing it. I mean, everyone buys shoes. It's just whatever's the hottest shoes out at the moment.
This one is off the charts for me, not typical. Look, I do some of that quant work, and it came up on my screen. It's certainly a cheap stock. The estimate revision's there. The growth is there. But what did it for me was...
I know, hold on, don't tell me. The McDonald's Crocs.
No.
With a Hamburglar on it.
No, it was my wife's mom. It was my wife's mom. She was getting some shoes, and she actually said, she's not even from this country. She's from Puerto Rico, not really fashion conscious here in the United States. She wanted nothing but Crocs. She wanted Crocs. I said, that's it for me. I'm in.
Yeah, everybody just wants Crocs these days. I'm glad you were here for the whole 10 ride.
Hey, thanks for having me.
Thanks a lot, David.